Hey everyone, welcome. It is 1 p.m. We just got the closing bell for Tuesday, July 23rd. We weren't expecting a lot of action today, and we certainly didn't get very much action. I wasn't necessarily expecting to stay between the EMA 20 and EMA 8 because that range is really small, but that's where we ended up. So we truly did just chop sideways today. We did get a little bit above that EMA 8, but we traded right back down, and today's open versus its close range is just really small. So we are down only 0.17%. I'm sorry about, I don't know if you guys can hear that, but there's a lot of racket and rattling right around me right now. I apologize if you can hear that. I'll try not to let it distract me. So we just chopped sideways, and we're going to expect more of the same tomorrow, assuming that the earnings that are coming up, the big ones, the Google is reporting should be between now and the next 10 minutes, 15 minutes. Tesla and Visa, those are all the really big guys that are reporting right now. So if we have a chance, we'll take a look at those, see how that might affect our opening tomorrow. But unless they're all in the same direction with really big surprises, I don't really expect us to deviate from our expectation that we're going to chop sideways between this 550 and 560 level today. So let's go ahead and take a quick look. Excuse me just a moment. I'm going to ask them to stop making so much noise. Sorry about that. So when we take a look at let's take a look at what happened with bonds and with VIX. So if we look at TLT, we can see that we came down, we continued to move down. We are right at that purple line right now. And we'll see if we bounce off of it or if we continue to move downwards tomorrow. There's a chance if we move down tomorrow, that's going to put pressure on bonds. Let's take a look at VIX. VIX continued to move downwards. Right now, do I expect it to swing way back up? No, I expect to chop sideways. So that's why we were seeking to close that VIX. In my official portfolio, it did not get closed. So I'm going to be just closing out basically right at this level tomorrow morning. Wherever we open up tomorrow morning, we're going to close that out because the VIX isn't really helping us that much at this point. It did great hedging us through that storm last week, but for now, it's not really helping us that much. And if we do decide to put it back on, we'll put it on in something more tech specific rather than SPY. So VIX is coming back down. VVIX, I'm sure it's decelerating quite a bit. So our expectation for the VIX is to continue to drop down because we have a pretty well-defined range between that 550 and 560 levels. So if we have a defined range, then we have a defined volatility as well. So we're not going to expect huge spikes unless there's just some really ginormous surprises with the earnings today. So let's take a look at so one thing with this so small, what I want to see is, was there any sector that has a large bar that traded in a large range, or were they all like this? That's going to be some important information. If they're all like this, then no, it's not going to be that helpful. But if there are some sectors where we did get large bars, then that warrants some of our attention, and we would pay attention for those sectors to perhaps pick up or have a lot of activity once volume comes back into this market. So the other thing that we're looking at today was volume. We said that volume would probably be low, below average, and that we would chop in a range. And look at this volume right now. That bar is tiny. It's 24 million. 24 million if we include the dark pool stuff that may or may not be in yet. We might get maybe another 10 million on top of that. So 34, 35 million. And that would only be 3/4 of the moving average. So not very much at all. So it's not too surprising. We're probably going to get the same thing for Wednesday, Thursday, unless, of course, we have some really big surprises in those reports. So let's take a look at our sectors. First, I'm going to take a look at momentum. I want to see if this relationship changed at all. So 90-day highs, 215 crawling up a little bit, and then 90-day lows 30 also crawling up a little bit. Still in the not enough for us to get excited about it. Still kind of in the probably chopping sideways range. So let's take a look at those sectors. And first, let's just look at the change today. Interesting. So aerospace looks like it had quite a bit of movement. Energy and semiconductors had quite a bit of movement. Biotech and small caps. Okay, so let's take a look at those. Defense, biotech, small cap, energy, semiconductor. Defense. Wow. Okay, so that is a very strong volume, strong bar above the highs right here, like very strongly above. This is a breakout with conviction. So it's hard to chase into something like this, but with that kind of momentum, and we're not above that third Keltner channel yet, this might be an exception where I might be okay chasing into this. Normally, we would say, hey, let's pull back until we see if it bounces off of this high right here. But this is probably going to go for a couple of days before it pulls back. Let me see if it was earnings related, if there's something specific in the defense sector. I don't want to move off of this, so I'm just going to open another tab. It's the wrong one. And we'll take a look at specifically the defense stocks, aerospace and defense. So we have quite a few large movers. KTOS, LMT, Boeing. Okay, so Lockheed had earnings. So it could be because of Lockheed. Yeah, looks like they all moved in sympathy with Lockheed. Lockheed is large cap. It is very influential. So it looks like this market ITA moved in sympathy with Lockheed. Lockheed gap up, move higher. Lockheed is above its +3 ATR. It could keep moving, or it might chop sideways until it hits the EMA 8 or EMA 20. So I'd be cautious going into this. So I don't want to go into, normally I like to wait 2 to 3 days at least after earnings report before I start considering, because sometimes it, well, I mean, what I'm about to say is going to sound retarded because that's what all stocks do. But I was going to say sometimes it goes up and it keeps on running. Sometimes it pulls back and sometimes it just chops sideways. Of course, that's what all things do. But if it moves with momentum though. So if it comes back down, it comes back down with strength. If it goes up, it goes up with strength. And if it just chops sideways, then it just chops sideways. So what if it does move, then normally it'll move with a lot of strength, not just kind of float. So this is something that we probably don't want to chase into. We just want to wait and see how that plays out. And then volatility goes out of that name, and then we can trade it. Because what's happening here is that the IV crush is not done yet, meaning that there's still heightened volatility. Even though we had earnings, volatility would have dropped, but we still have at least 2 days till expiration of options. If this has weeklies, I'm not sure if it does. And if it doesn't, then it's all the way out to August 16th. So there's still a lot of volatility, even though volatility would have come down, there's still a lot of volatility here. And if I buy a call or a put right now at heightened volatility, then I'm going to lose money even if price goes my way. if volatility just continues to smush downwards. So let me see if I can find a demonstration of that. So let's go over here to my options chain. And what we see here is that we've got this volatility right here, 25.33%. And you can see that the following week, it drops to 18, 17, 18. So it looks like this 18 region is pretty significant. And we might say, hey, that doesn't seem like a big drop, but watch this. Let's say we decide that we like LMT, just say to the long side. I'm just picking a direction. And we think that LMT could move up to, let's just say 10%. That would be a pretty large move for in the next week. 10% would be, well, no, that's way too big. Let's say 5%, so 25. So it could move up to 5.5. Okay, so we say, hey, it might move up to 525. Let me buy the just in the money call right now. And you can see it's a fairly large bid ask because volatility. Even the market maker wants to make sure that they're protected. So this would already normally preclude me from going into this. So say a $1, almost $1 wide spread on a $9 or not and change option, that it's a little too much. It's about 10%. It's a little too much for me to for that bid ask spread. But let's just say we were going to do it. Okay, we go in at maybe we get the mid at 935. Let's just assume that we can get the mid. And we say, okay, we believe that by August 16th, so there's no weekly expirations. We say by August 16th, we believe that it could move up to 525. So it's at 501 right now. So let's just say it can move up another 23.7. Okay. And you say, great. Let's say it happens by August. We don't want to go right to expiration. So just say the week before August 16th. So August 9th. And we say, great, we buy in at 935, and theoretically it would be $25. That's a big move, big move. But what happens if volatility drops by 7? Okay, so 25, just call that $15. Now if I adjust my volatility by 7, what does that become? Where did it go? We were doing the 500 call and 7, not 7. It's got to be 7. It's not 7%. It's got to be percentage of. So 25.34 divided by 18. Oops, sorry, minus. Oops, 25.34 minus 18.74 divided by 25.34. So we move down 26%. So I go down, and I went the wrong way. Volatility decreases by, well, let's just start decreases by 7%, and then I'll show you decreases by 26%. So that 500, that same theoretical price, if I did 0, it goes from 25.3 down to not that much, surprisingly, 25.72. But then if I go down to 26%, then we're talking about 25. I guess in this case, my example was poor and it just didn't affect it that much. But my point is that volatility normally, especially if you go further out the money, maybe that was the mistake that I made. I didn't go far enough out the money. So if I say 25, since that's our target, we would say that, okay, if I bought this out of the money put, it looks like that I could potentially make almost 4 times my money, 3.5 times my money right here. 145 or 150 to 475. So three times that, three times 150 would be 450. So let's just call it 300%. But then my volatility goes down by 26%. Okay, suddenly it's worth zero. See, so it made a huge difference on the out of money. It didn't make that much of a difference on in the money because there's not that much extrinsic value. But on the out of the money options, it made a huge, huge, huge difference. It was something from huge profit to zero, zero profit. So, and then even if I said, okay, well, maybe it's not that extreme, maybe we just go down 7%. Still, it went from the possibility of going from, why is everything all messed up? Going from, I'm looking at the wrong one. Okay, right here. So if we go from up to 476, or we called it 450, if I go down 7%, now it's only 2.73. So it's still profitable, but it's not 300% gain. It's about not even 100% gain. And if I go down that 26%, then it's still zero. So that volatility is really important. And right now, inside of that LMT, we have heightened volatility. It hasn't completely collapsed yet. So if anything that we try to do with this, we're going to be paying up for it. And we would want to wait at least past this Friday before that volatility to come out of it. So we're going to avoid the defense sector. The other sector, I believe, was biotech to the upside. Yeah, biotech. And then we had energy and SMH to the downside. So it looks like a XBI. XBI is not a huge move. So this is probably more reasonable. This actually looks like a bounce, a very nice bounce off of the EMA 8. And that confirmation bar followed by another bar. If I didn't believe in this confirmation, this could be a confirmation. It's just not entirely above the EMA 8, but that's okay. This is nice. XBI is looking pretty good. So let me check the rest before we move on. And give me a moment to get a sip of water. Okay, thank you. So SMH down 1.1%. That's just down to this MA50. That's not too significant. And SMH, I wouldn't want to touch right now anyways because of earnings, Google earnings, all that. And it doesn't look like it's in a position for us to go into the downside. We want to break this low before we considered it. And we don't want to go to the upside unless we break this high right here. So SMH is untouchable for us at the moment. And so let's look at XLE. XLE was looking strong last week, but it's breaking down. It's breaking down pretty hard. I would want to see it come down to maybe that MA200 or this slopey line. On the energies, they're more like commodities. I don't look at all these moving averages, but MA200 is always relevant. So I probably wait to see if it comes down and retest this MA200 before I started looking at it again. And then I want to see, does it break it or does it bounce? Then I could pick a direction on XLE. For now, it's like catching a falling knife. And if you try to trade it to the short side, well, it could reverse from here. It's not, see, there is some support. If I look horizontally, there is some support right here. So I would just avoid XLE. So it looks like really XBI is our best bet if we want to look for something. And let's just look real quick. Might as well. Okay, so it looks like we probably had some earnings too, because these are really big numbers. Fate, Beam, but they're small. They're not anything I've heard of. Fate, not earnings, but a huge movement upwards. Beam, not earnings, huge movement upwards. They're probably some sort of news related though. Maybe they have a drug, or I don't know what they do, some sort of, what if they have a new product release or something like this. Biotech is actually very, very, very hard to invest in because it's very news driven. So unless you're going to go in and read reports and follow research and follow what all the products that each company is developing and what stage they are in approval and all of this, you can't just go by technicals. You can't just assume things. You have to get into a lot of detail if you're going to go into biotech. And it could pay off, but it's a lot of work. It's a lot of work for that payoff. And there's a lot of time in between spent on each company and then continuously following because their product cycle is years, many years, 5, 10 years, 20 years sometimes to get an approval. So it's very tough to just look at biotech and just say, hey, this is looking good. It looks like some technical pattern. I would never do that on a biotech. So maybe we don't really look at this one either. As a ETF, it's fine. But as an individual stock, no. So an ETF. So if I were to go into this, I guess I'm saying is just do XPI. Don't try to do individual stocks because they are heavily they're not correlated to each other the same way. For example, Target and Walmart would be correlated to each other. If those two that I saw just now, Beam and whatever the other one was, they're not going to correlate because the everyone is being evaluated by itself based on its product production or product queue. So if we do something like XBI, it's always well, for me, if I do something with biotech, it's always going to be on an ETF level simply because I don't have the time, effort, energy, resources, or desire to go in and look at all that research because I can get similar gains through other methodologies without digging into all that and becoming an expert on something that I may or may not trade in the next couple of years. So for me, it's XBI is just best avoided except for on a ETF basis. Okay, so nothing really to look at. Everything is kind of chopping sideways. Our market is chopping sideways. So I would just say, just look out for the 550, 560 level. Those are still going to be good. I mean, unless something crazy happens, they're going to be good for the rest of the week. And I guess I've been talking long enough that we can look at those earnings, which were Google, Tesla, and Visa. So let's take a look at that. Google. Ooh, it's volatile. Went up a little, went way down, recovered, went back down. This is choppy. It's hard to say. So was it a good or a bad reaction? Or is it a good reaction? So this has had to do probably with the earnings call. So we'll see. So this is very mixed. In any case, it doesn't look like Google is going to depart from its close too much. If I'm getting this type of swinging back and forth, it's not like it was directional and then paused or pulled back a little bit. No, it completely reversed itself, then went back down, and then completely reversed itself again on just took more time to do it. So Google, hey, it's kind of saying we're probably going to chop sideways. And then let's take a look at Tesla. Tesla down, down, down. Not the normal pattern that we see. Normally, we would just see a sharp movement downwards, but we got I guess if we didn't see any of these other bars, we'd call that a sharp movement downwards, but it was only from 246 to 242. So actually not that sharp, only well, not even, what is that? Not even, yeah, not even 2%. So I would say this is not a major move for something like Tesla. Tesla is super volatile. So how do I undo this? Okay. So what's the ATR on Tesla? Current ATR is pretty low for Tesla. You can see, I guess it moved back up. I was looking too far to the left. Current ATR is 12.98, so 13. And on the earnings news, we moved 12. So one ATR. not even one ATR because we bounced back some. So, yeah, that's not a big move for Tesla. It's a normal day's move for Tesla. That's the definition of the ATR. It's a normal day's move for Tesla. So that's not going to really affect us. So Tesla is basically chopped sideways. Its contribution isn't going to really shift the direction of the markets much. And then let's look at Visa. Also down. Let's see. We closed at 265. So down about 6 to 7. And Visa's ATR is 4.35. So a little bit outsized move, not hugely outsized, but a little bit outsized. Let's see what we're looking at for Visa. We're looking at an $8.7 move on the day and a $9.7 move on out to Friday. And we moved, what did we say? 6 to 7. So again, this is well within expectation. So nothing market moving, nothing earth shattering. So really, tomorrow, at least everything that we can see so far, we'll see how Europe trades, how Asia trades, how the futures markets look. But so far, earnings today shouldn't really have an effect. And then we're just going to expect chop sideways. And I'll let you know tomorrow morning if that picture changes, if we get more data around this. But so far, everything that we can see right now is, yeah, everything I said this morning is still valid. We're probably just going to chop sideways 560, 550 level. By now, we should probably just have our portfolios neutral, as I've been suggesting over the last couple of days. And if we need to, well, I need to get that VIX trade out of the way to make my portfolios completely neutral. But it's not a big deal. It's the hedge. It's a tail risk type of trade. So even if it loses completely, it shouldn't be devastating to your portfolio. Okay, so that is it for today. We'll see how everything looks tomorrow morning. Have a wonderful rest of your day, and I will see you in the morning.